Hey guys, welcome back to my channel. So in my previous video I've just covered about the concepts of journal and double entry system of accounting. However, in this video we are going to look into another accounting book, which are ledgers. So before I begin this video, I'll just give a short intro of myself. So my name is Aman, and in my channel I simplify basic financial concepts, thus enabling you to have a better understanding of finance and accounting related concepts as well. Now without wasting any further time, let's just start the today's video. We know that in order to record a transaction, at least two accounts are utilized. So a ledger is exactly opposite of that. A ledger refers to the collection of individual accounts in which the transactions are recorded, and the transaction can either have a debit balance or a credit balance. And number two, there will always be a brought down balance and a carried forward balance. So now let's just understand what is a brought down balance and a carried forward balance. So a brought down balance refers to the opening balance of an account which is carried forward from the previous accounting period. For example, if the cash account at the end of the accounting year, which is 31st March 2025, is for example 10,000, so the brought down balance will be 10,000 but on 1st April 2025, which is the start of the new accounting period. Now the same way, the carried forward balance refers to the closing balance of an account at the end of an accounting period. Now in my previous example we took the cash account, so the cash account which is closing on 31st March 2025 is the carried forward balance. Now let's just look into some of the examples of ledgers. But before we move on to the examples of ledgers, we know that firstly journals are being recorded, because that is how an accounting process is being followed, from source document to journals and then to ledgers. So and also making journals before ledgers also make the things much more convenient, because it's easier to record the entries into ledgers afterwards. So firstly, the entry is deposited cash into bank worth rupees 3,000. So we know that the journal entry will be bank account debit to cash account, because as we are depositing the cash into bank, so the bank is the receiver of the money on the other hand, and from the business the cash is moving out. So that is why bank account debit to cash account and 3,000. Now moving on to the another example, which is received cash from the supplier Mr. B worth rupees 5,000. Now as we know that from the business perspective, the cash is coming into the business, that's why the cash is being debited, and on the other hand, as Mr. B is paying the cash to us, the Mr. B account will be credited. So the journal entry will be cash account debit to Mr. B account, as the cash is coming into the business. Now let us look into some of the examples of ledgers. So number one is cash account. But before we move on to cash account, there's some simple things that we have to keep in mind. We need to look into every journal entries in which the cash account is being recorded. So in our case we have recorded two journal entries, and in both the cases the cash account is being recorded. And also the same accounting names are not being recorded under same heads, which means that if we are making a ledger for the cash account, we cannot write under that to cash by cash. Okay, so in the first example we can see that we have written to B and by bank. So how we arrived on this conclusion? So we can see that the first journal entry is bank account debit to cash account. So in this case, whatever is being recorded in the journal entries is exactly reversed into the ledgers. So if the bank account is being debited, we will under ledger we will write it by bank, and in the second journal entry we can see that cash account debit to Mr. B, which is supplier. So in the ledger we have written to Mr. B, and we can see that the difference is amounting to 2,000 rupees. So that difference becomes our credit forward balance. So that is why we have written by balance CD 2,000 rupees. So and remember, both the sides should have the same amount. The amount should be equal. Now secondly, we can see that under bank account we have written to cash. So we only have one journal entry associated with bank, which is bank account debit to cash account. That is why we have written to cash, which is 3,000 rupees, and the difference of the amount is 3,000 rupees. That's why we have written by balance CD 3,000 rupees, which is the balance amount. And remember, both the amounts has to be equal, so that is why 3,000 is equal on both the sides. Lastly, we have made Mr. B account, and Mr. B has also been associated with only one journal entry, which is cash account debit to Mr. B account. So that is why we have recorded by cash 5,000 rupees, and the balancing amount will come towards the two sides, that is 5,000 rupees. And as we know in the ledgers, both the amount has to be equal, that is why 5,000 is equal in both the sides. So that's all with the today's video, guys. And if you want to learn more about accounts, you can check out my previous videos. I put the link down below in the description. Till then, see ya, stay tuned, keep learning.